Hi, this is Richard, and I'm back with my weekly blog on condo hotels. And today I'm going to be discussing rental management agreements, or RMAs. And today's video is really a continuation of a video I started last week where I did a narrative, and today I'm going to do a screencast. And the narrative is on distribution percentages promised to owners. These percentages can be controversial, and the reason I say that is because if a condo hotel unit owner in one building gets together with another and they compare notes, they could ask questions as to why one is promised 50% distribution, the other is promised 45%. And rather than get into that now, what I would like to say is that I'm going to take you through this Excel sheet, include the deductions that are often asked for in rental management agreements, and then show you through this calculation what is being promised in the RMA and what the owner could actually be receiving. And you can see that there will be a difference. Okay? So what I've done is I've taken 7 actual condo hotels and I've read their RMAs, and what I will describe to you now is exactly what's in those RMAs. So the best way to start is with gross room revenue. Now these are arbitrary numbers, they're meaningless, but they should represent what the gross room revenue is in one unit, and that will be $1,767 in each unit. And as I said in my prior narrative, the most important part to this really is that this number be maximized and at least competitive with the other hotels that are in your competitive set. So if your next door neighbor that has exactly the same 4-diamond hotel as you do is earning $1,900 or $2,000, that's where the difference in what your check is needs to be questioned, and that will be a separate video. In this case, this $1,767 is what is deposited into the hotel owner or operator's operating account on your behalf. The source of the reservation sends funds, and it goes right into that account. Now, what hotels and hotel condos will often do to stimulate business is create packages, especially in need periods. Breakfast packages are huge, and that's what I've used here. They're especially popular with Europeans, South Americans, foreign guests. And often, when comparing 1 or 2 or 3 hotels, if you have that breakfast package, your hotel could be chosen over the other simply for that reason. So I think it's important to have them. They're good for business. But what happens here is these are the breakfast coupons that are provided to the guests when they check in. Now, when you offer a package, normally the hotel will provide each guest with 2 coupons per night, and of course you multiply the number of coupons by the number of nights that you stay. Okay? These are not coupons that have been used, not breakfasts that have been eaten, but they are coupons that have been issued to the guest, and then the guest will decide whether they will use them. Now, the yellow highlight here is actual usage, and I am not going to get into this now because frankly it's not used in the calculation, and you may think that it should be. It's something that can be discussed, but I will get into that later. I want to go through the actual calculation with you now. So we take the gross room revenues, and of course I'm looking at Condo Hotel 1 because it's convenient, and I deduct out the coupons that have been handed to the guest at the front desk, and we come to $1,600, which I'll call gross room rental revenue net. This is actually the amount that you see on the folio that you receive every month. You do not see anything up here. And oftentimes they'll break this number into the number of reservations. They'll show you the room nights and the average daily rate, and so you see that detail. Each RMA calls for discounts or costs, and they are, I'll call them arbitrary. They differ from every RMA. In this case, let's look at Condo Hotel 1, where the RMA calls for a reservation fee, a travel agent fee, and a credit card fee. And in this case, it totaled $90. How do they arrive at these? What they do is they take the line item on the profit and loss statement from the hotel, and what they do is they divide that cost out amongst the people that are in the hotel program. Why do we have deductions? We have deductions to reduce the distribution amount to the owners. I mean, it really is no more complex than that, and it happens to be the truth. Condo Hotel 2, their RMA only calls for a travel agent fee. And once again, I can't, as a hotelier, I can't imagine why, but they've decided that they're only going to take 45% of that line every month and then divide that amount amongst all the people in the hotel program. If you go through these, you'll see each has its own formula and each calls for different amounts. And you can see the totals, and that's the amount that's taken from the gross room rental revenue net. So back to Condo Hotel 1, $1,600 is shown to you on your statement, $90 is deducted, and we arrive at $1,510 for Condo Hotel 1, and you can see going across what is brought down for each of the other condo hotels after their deductions. Now, some condo hotels call for a service charge, not all. And when I see the service charge, it usually is 10%, and so that's the number that I used. And you can see here, I arbitrarily picked 7 hotels, and of those, 4 of them did call for a service charge, and they were 10%. So it simply is 10% of this $1,510 in Condo Hotel 1, multiply it by 10%, and you have another deduction of $151. Okay? Subtract 151 from 1,510, we come down to 1,359, and so on and so forth with the rest of the hotels that are here. So now we get into that percentage we were talking about that's on your RMA. This is what the RMA calls for as the split. And often this is what's highlighted here in yellow is what condo hotel owners from hotel to hotel or building to building will discuss and think that they're getting. And as we take this down, we'll see what they actually, or what you or they are actually receiving. Okay. Now, needless to say, when condo hotel number 1 is getting you're getting 45%, the owner-operator is receiving 55%. And they use those costs to pay all their costs, their labor, and they're in business, of course, to make a profit, and so that's what they use that for. Okay? So now what we do is we take the adjusted net rentals of $1,359, we take that owner percentage promised in the RMA and multiply it, and the owner will then receive a check if no additional fees or credits are due for $612. Despite the fact that the RMA calls for that 45%, you can say in the case of Condo Hotel 1, which had quite a few costs and deductions taken out, that you're actually receiving 38.2%. Now, let's jump over to Condo Hotel 7, and you can see that after the split, after the 50% is received, or $800 is received, this condo hotel calls for additional fees that only come from the owner's side. And in this case, and what I've seen is linens and maintenance. Now, if you go back to my prior blog, I spoke about linens. Linens are the second highest line in a profit and loss statement in any hotel you look at. Whether it's owners taking towels to the beach, taking towels off the property, taking them home, cleaning their car. You know, we always wonder in this business what happens to our towels. It could even be sending the towels out to a company that's cleaning them and not getting the same amount back. Towels is a big problem, and I, as a condo owner in a condo hotel, I have no problem with that fee because as a hotelier I know that it is it can be a huge cost. Maintenance, when it's deducted, could be in condo hotels that have agreed to do minimal things in condos, scratches on walls, little stains in carpets, things like that, usually things that will take less than an hour, and there's a little fee for that. And something that I haven't included here, but I see often, is what I call heavy-duty cleaning, and that's usually twice a year, sometimes once a year, but twice a year is more normal, and that fee could be anywhere from $100 or $200, and that's when housekeeping and maintenance gets into your apartment and heavily moves everything and does a heavy cleaning. So once again, we see in Hotel 1 that the actual percentage that goes to the owner is 38.2. In Condo Hotel 4, it's 53. So you can see it's all over the board. Condo Hotel 6 is 47, and so forth. Now, to really take a good look at this, I wanted to also bring in what the operator is getting. Well, in Condo Hotel 1, if you're getting 45%, then of course the hotel operator or the hotel program owner is getting 55%, and so in this case it's $747. And whatever the contra percentage is in the other agreements, this is what the operator gets. You need to add in your additional fees and credits. Just as a reminder, Hotel 1 is getting $241 the operator is receiving, and where did that come from? Just as a reminder, $90 was deducted for costs. The extra 10% for the service fee was deducted, and those two together come to the $241 that we see here. The hotel operator is getting $988, or 61.8% in this case. Once again, you go over to Hotel 4, they're only getting 47%, and you can go through what the differences are. If you add both these percentages together, of course you get 100%, and that really is my check and balance number to make sure I got it right. And I've also looked at how often condo hotels are paying their owners. Now, Condo Hotel 1 is paying their owners on a quarterly basis. I don't like that. I really feel that 1 month is reasonable. It should never be under 1 month because there's quite a bit of calculation to do. Sometimes there's repairs and specific things that went on in your unit that had to be taken care of, and so accounting needs time to calculate all those. And you can see that there was a 45-day called for in Condo Hotel 2. And the length of the agreement, they can vary as well. I noted that in Condo Hotel 4 that a 3-year agreement was called for. Now, that's the hotel that was providing the highest percentage to their owner as a distribution, and that may be one of the reasons the commitment is longer. The length of Hotel 1 was 2, and I like to see 1 year. They normally have self-renewing clauses. I don't like that for myself. I am a condo owner in a condo hotel, and I like to be reminded a month before the end of the term that my term is expiring. Now let me jump up here again because I want to now get back into the breakfast coupons just for discussion's sake. I'll unhide that. This is usage, and the line item or the income that's reported, the difference between coupons that are used and coupons that are not used, is reported by a hotel as usage income. Now, what I've observed in after analyzing many condo hotels is that the highest number of breakfasts that I have seen consumed is an average of 60%. And listen, this is not to argue with operators or hotel owners. They may tell you that 90 or 95% of breakfast coupons that are issued are used. I respectfully would not agree with that. Now, if you go to a hotel, I mean, ask yourself, you go to a hotel for 6 days, if you eat 3 days, that's 50%. that for me would probably be normal. And if the breakfast was incredible, I might eat there a fourth day. But typically, it's not going to be more than 50%. And again, for conservative sake, I use the number 60% here, even though my observation is more 45 to 50% of the people eat the breakfast, and the rest of it are uneaten breakfasts. And so you have to then ask yourself, well, what happens with those uneaten breakfasts, and why am I not receiving that income? Aren't I entitled to that income? What I recommend to bring up with your condo hotel program owner is that it would be more than fair at the end of the year, because it would be an accounting nightmare to do it month by month, to take all the, what we call this breakage income, that's what it's called, total it up, use room nights or some other pro rata method of determining how it should be distributed, and that amount really, to me, should be distributed at the end of the year. But that might be questioned. It definitely is a gray area, but it could end up being sizable amounts of money when taking into consideration all the unit owners and the number of years that they're in the program. So something you may wish to discuss. Lastly, what I'd like to talk about is Condo Hotel 8, which is a virtual hotel, and I'm going to walk you through this, and this would be what we're doing with some condo hotels where the association decides that it is in their best interest to buy the hotel program. Now remember, once you buy the hotel program, there's no profit to the operator, there's no profit to the profit is to the hotel, then should be distributed at the end of the year amongst all the owners. Okay, so there will be a higher distribution because you're taking the owner position out of the situation, and you are the owner. Okay, so let's just, for argument's sake, say that the amount of gross revenue is $1,767, as we said. But in this case, there's no reason not to distribute anything other than what is eaten. And what we would have, instead of deducting 167, and again, remember, arbitrary numbers, would be that your gross room revenue would be net at 1,667. There is no reason at this point to have any costs, any discounts, so that would be zero. Okay, and I call this simple, stupid calculation. This is how I run my life. I call it's simple, stupid. It's very easy to understand, and I can't understand the complexity sometimes of a lot of what we do. So let's just call it that. And so what we're bringing down now to net rental revenue is the full 1,667. Again, no service charge. You're the owner. Okay, so we're bringing down 1,667. And what I'm saying now is that rather than give an arbitrary figure that really isn't correct, pick a percentage that we know the hotel can break even at and distribute it. And so we'll simply multiply. Let's call it 45% for now. Sorry. Okay, so now we see $750 is being brought down as the check that will be paid to the owner at the end of the month if no other additional fees or credits are due. And that amount, if we calculate it, wow, that's the number of 1,667. Well, of course, it's 45%. Sorry I took you through that last one. That was pretty obvious. Okay. And at the end of the year, if there is an additional profit, that also should be distributed to the owners on a pro rata basis at the end of the year. Again, we don't want the hotel program to earn income. If the hotel program did earn income, then that income would be a check coming out of the hotel program paid to the condo association, and it would be used the next year to reduce your monthly maintenance costs through the building to everyone. So I hope that this was valuable for you. If you have any questions, please, I'm typing my condo hotel answers at gmail.com. Send me an email. I'm happy to answer any questions that you have, and I hope that this was beneficial to you. Thank you so much.